Hello and welcome. Today, we are going to tackle a topic that, let's be honest, can feel pretty complicated and maybe even a little scary: Indian income tax. But stick with me, because we're going to break it all down, piece by piece, into a super simple guide so you know exactly what's what.
You know, for a lot of us, the second you hear the word tax, you kind of think of it as a burden, right? Another complicated chore you have to get through every single year. But is that the full picture? Or is it maybe a duty that actually keeps our country up and running? We're going to look at it from both sides.
So why is the government so interested in your taxes? Well, let's just follow the money. This chart here is pretty eye-opening. A whopping 39%, almost 40% of the government's entire income comes from just two places: the tax on your personal income and the tax on company profits. That means the money you and I chip in is directly funding a massive chunk of everything.
Okay, so here's our game plan. We're going to start with why this stuff even matters to you. Then we'll cover the absolute basics. After that, we'll figure out who pays and when. Then comes the big one: old versus new tax regimes. And we'll wrap it all up with how you can legally save some tax.
Right, let's dive into the big why. Why should you care about taxes? Beyond just the fact that it's the law. Because honestly, getting a handle on this is a huge part of being financially healthy.
You've probably heard this saying, right? And it's true. In India, if you're earning a decent income, taxes are just a fact of life. You can't really ignore them. Trying to just leads to penalties and legal notices, and trust me, that's way more stressful than just handling them properly from the get-go.
And filing your returns isn't just about staying out of trouble. Think of your tax record as your financial passport. It's the proof of income a bank needs to see before they give you a home loan. It's what embassies look at for a travel visa. It proves you're credible. Oh, and here's a big one. If your employer accidentally deducted too much tax, filing a return is the only way you're getting that money back.
All right, let's lay some groundwork. We're going to quickly go over a few core ideas, so everything else we talk about will make perfect sense. At its heart, income tax is actually pretty simple. It's the money we all contribute from our earnings to pay for all the stuff we share as a society. Roads, schools, hospitals. Remember that government income chart? This is where it all comes from. Now, here's something really useful to know: the difference between the two main kinds of taxes. We're focused on direct tax, which is the tax you pay directly on your salary. The other kind is indirect tax, like GST, which is baked into the price of pretty much everything you buy, from your phone to a snack. Everyone pays indirect tax, but direct tax is tied specifically to what you earn. So, what does the government actually consider income? Well, they've sorted all possible earnings into these 5 buckets, or heads: your salary, any rent you get from a house, profits from a business, gains you make from selling things like stocks, and then a catch-all for other sources, like the interest your bank pays you. Every single rupee you earn fits into one of these. Okay, this brings us to a super important section that clears up a ton of confusion for people. Who exactly has to file taxes, and what are the key dates you absolutely have to remember?
Now listen up, because this is a point that trips up so many people. Filing a return and paying tax are two different things. The exact numbers can change, but the main idea is that the income level that forces you to file a return is usually way lower than the level where you actually have to pay any tax. So you might earn enough that you're legally required to file an ITR, but still owe zero tax. You have to check the rules for the current year, because not filing, even if you owe nothing, can get you a penalty. Now for the dates. Get your calendar out for this one. The biggest, most important deadline for most of us to file our ITR is July 31st. Mark it in red. If you miss it, you can still file until December 31st, but you'll have to pay a fine.
And now we've arrived at probably the biggest decision you have to make every year when you do your taxes. Are you going with the old regime or the new regime?
This table really lays out the trade-off. See, the old regime is all about planning. The tax rates are higher, but you can lower your bill by making a bunch of specific investments and claiming deductions. The new regime is all about simplicity. The rates are lower right off the bat, but you basically give up most of those deductions. So the choice really boils down to your own financial situation and habits. Here's the thing. The government has pretty much designed the new regime to be the default choice, and honestly, the better option for most of us. Unless you're a really high earner with huge specific investments that qualify for all those old deductions, the new regime is almost certainly going to save you more money and be a whole lot less complicated.
So, you've decided to go with the new regime. Does that mean your tax-saving journey is over? Not quite. Even though most of the old tricks are gone, there are still a few really smart and completely legal ways to bring your taxable income down.
There are two main strategies you need to know about. First, if your employer contributes to your national pension scheme or NPS account, that amount can be a deduction. And second, this one's for property owners. If you have a home loan on a property that you're renting out to someone else, the interest you pay on that loan can be deducted from your rental income.
Okay, to bring it all home, here is your simple 4-step action plan. Step 1, get yourself an account on the official income tax portal. Step 2, download your AIS and Form 26AS. Think of them as your financial report cards. Step 3, use the calculator on the portal to double-check which regime is truly best for you. And finally, Step 4, file your return before that July 31st deadline. It's really that straightforward.
And I'll leave you with this final thought. It is so easy to see tax planning as just another annoying chore on your annual to-do list. But what if we flip that? What if, by understanding and managing your taxes the right way, you're not just following the rules, but you're actually taking control of your money, you're optimizing your savings, and you're taking a massive first step towards building real, true financial freedom?